making time to attend today's Zoom webinar. My name is Ridge Howell, and I am the legal counsel for the Native Agriculture Financial Services, or NAFS for short. NAFS is the first ever lending entity within the farm credit system dedicated to Native American producers. We are currently working to stand up our organization as an other financing institution within the farm credit system, and this will expand access to hundreds of millions of dollars in lending opportunities for Native American producers. Thanks to funding from the Native American Agriculture Fund, NAFS is proud to host a series of interactive webinars with agencies under USDA over the coming months. Today, I am happy to introduce Kimberly Eilerman from the Loan Making Division of Farm Service Agency, who is going to walk us through the FSA Guaranteed Loan Program. If you have any questions throughout the Zoom, please feel free to unmute yourself and ask them. We will also be monitoring the chat box. If you're more comfortable posting a question there, we can take that back up and ask it to Kimberly while we're going throughout the Zoom. And the Zoom is also being recorded and will be posted for later viewing after we conclude this meeting. With that, I will let Kimberly introduce herself and tell us a bit more about what we are learning about today. Thank you.
Yeah, absolutely. Thanks, Ridge. Can everybody hear me okay?
I hear you great.
Perfect. Good. So like he said, my name is Kim Eilerman. I'm currently serving as the assistant to the director of the loan making division within the farm loan programs of the Farm Service Agency. And so today I also have with me Nicole Massey. Nicole serves as a senior loan officer within our guaranteed loan making branch. And she has prepared the introduction to the guaranteed loan program for you all today. And so it's going to be a very brief program and allow a lot of time for you all at the end to ask some questions. So feel free to interrupt if there's something on the screen that you don't understand or you can't quite follow. We're happy to take those questions as we go through the program, or we can take those at the end. But we're going to start with just a very basic overview. And like Ridge said, this is going to be a series. So we are going to kind of gradually increase the type of information and the complexity of the information as it goes along. So if you're already familiar with the Guaranteed Loan Program, this will be a very basic, I'll call it a 101 level, entry level information for you all. And then we'll gradually increase in that complexity as we go along. So again, feel free to ask any questions. Super happy to be here with you guys today. I won't be on camera. I'll be kind of hiding in the background while Nicole does her presentation. But I really appreciate everybody being here today, making the time, and I'll hang out for questions at the end. So with that, Nicole, take it away.
Hello, everyone. I won't be showing my camera for now, but after the presentation, I will try to show myself online here. I've been having just a blast with the camera this morning, so bear with me. Thank you for joining today's training session to introduce the FSA Guaranteed Loan Program. My name is Nicole Massey, and I will be your facilitator. Today, we will explore the advantages of participating as a lender in the Guaranteed Loan Program. We will cover various lender statuses, their associated requirements, and take a close look at the type of loans that FSA offers. Additionally, we will discuss other essential aspects of the program to ensure a successful outcome for both you as a participating lender within our program and your customers. Shall we get started? What is the purpose of a guaranteed loan? Guaranteed loans are basically provide credit to family farm owners and operators who not normally qualify for a standard commercial loan. This particular program supports beginning farmers and those facing financial distress while safeguarding your local communities by protecting family farms. Additionally, it enables lenders to extend credit to farmers who normally would not meet the in-house bank eligibility criteria. Let's discuss some of the differences between the guaranteed loans and direct loans. Now, when it comes to guaranteed loans, I consider Farm Service Agency as the silent partner. Here's how the process unfolds. The lender and the farmer will convene, basically discuss the overall requirements. The lender will conduct a field inspection if deemed necessary of the operation. The lender will meet with the customer, go over documentation, gather those important documents to put together a packet. Once the plan is formulated, the lender and the farmer will negotiate the interest rate in terms of the loan or loans. It's important. There is a 1.5% fee that the lender can either pass on to the farmer or include in the guaranteed loan request being submitted. Also, a guaranteed loan application cannot be approved before the appropriate environmental review is completed and approved. So that's a little bit about the guaranteed loan. Now, with the direct loans, FSA will handle all the steps directly with the farmer, and there is no fee involved. Benefits to lenders participating in our guaranteed loan program. One, as a lender, it will help you to manage your credit risk. That means the guarantee ensures you as a lender will be protected against the loss of a portion of the loan. Secondly, it will help you increase customers. The guarantee will motivate you as a lender to offer affordable financing to farmers who are unable to secure what we consider conventional loans. Thirdly, improve your liquidity. By selling loans on the secondary market allows lenders to free up funds to lend to others. And fourthly, mitigating interest rates. Some lenders can provide fixed rates over an extended period by selling loans on the secondary market. Now, let's get into the different classification of lenders. The first category I would like to discuss with you is the microlender. With a microlender, the eligibility includes, it allows non-traditional lenders, for example, CDFIs or credit unions, and commercial lenders to participate in our program. The program will also authorize a microlender to originate and service easy guaranteed loans. You may ask, what is the experience requirement? For this particular category, lenders must have experience in making and servicing business loans. Again, experience in making and service business loans. If no experience in making ag loans, it's okay. You can still move forward. The oversight for the microlender. Lenders are subject to oversight as established and announced by Farm Service Agency. One of the major things we look at as you apply for a microlender, the lender must have overall originated 20 or more business loans of $50,000 or less. Again, the lender must have overall originated at least 20 or more business loans of $50,000 or less. Once we have established that you have done 20 business loans, then we're going to look at your loss rate over the past 7 years. We're going to look to see if your loss rate is under 3%. In this category, you must show, again, that you originated 20 or more loans and that your loss rate is under 3%. Let's move on to the next category. This is what we consider the basic category, standard eligible lender. Your experience level for this particular category, you must have experience in making sound agricultural loans. That's right. It's a little bit different from the microloan. The microloan, as long as you made business loans, you're fine. But with the standard eligible loan, you have to show us that you have experience in making sound agricultural loans. And not only make those sound loans, but you should be able to make and service the guaranteed loans. We will go through what we call a regulatory search and compliance. We're going to look at three things. We're going to make sure that you have experience in making and servicing ag loans. Number two, we're going to be checking out your losses or your deficiencies to make sure they're not at a high concerning level. And three, you must be subject to a credit examination by state or federal agency. And if not, you have to show us that you are supervised in some kind of shape, form, or fashion. Also, as a standard eligible lender, documentation will be required, significant supporting documentation. And you may ask the question, what do you mean by supporting documentation? Well, I'm going to list just a few items of what those documents will include. One, you will have to submit an application. You will have to submit a lender's narrative, a balance sheet, a cash flow, copy of a credit report. And if you're dealing with an entity, you will have to submit the entity information along with any environmental information. So I wanted to kind of list those items out so you can compare if those are basically the same items that you would obtain for any loans that you will require in-house. The next thing about the standard eligible lender, you will be required to abide by FSA's underwriting criteria. That's a little bit about the standard eligible lender. Again, we refer to that as our basic. Let's go to the next category, the certified lender. With the certified lender, you have to have moderate experience with Farm Service Agency, meaning you have history with making loans with FSA. With the SEL eligibility criteria, it's the same for the certified lender. The only difference is with the certified lender, you have to show that you've made 10 FSA agency guaranteed loans ever and 5 such loans in the past 2 years. After you're able to show us that you have made 10 FSA guaranteed loans ever and 5 loans in the past 2 years, we're going to be looking at the loss rate. The loss rate cannot exceed 7%. For your documentation, you will have a little less supporting documentation that you will have to submit to FSA. And what is also different about this category is a quicker turnaround. For example, the standard eligible lender, FSA has 30 days from a complete application for a final determination, and with the certified lender, it goes to 14. Let's look at the last category. This is what we consider the top epsilon category, preferred lender. Designated as a preferred lender, you have extensive FSA experience, extensive experience. Normally, if you start with the standard eligible lender, after you made so many loans and we see that your loss rate has been considerably low, you jump to certified lender. Again, as you can see, with certified lender, as you work through the year or years with FSA, and you meet the criteria for certified lender, you jump up to the PLP lender. With the PLP lender, you show that you have a minimum number of 20 guaranteed loans in the past 5 years, but your loss rate is set at 3%. Also, when you become a PLP lender, we work with you and you will put in place what we consider is the credit management system. A credit management system is basically an agreement between yourself and FSA. This document that we refer to as the credit management system outlines the manner in which a lender will process and service the guaranteed loans based on your own underwriting and servicing policies. That's right. As a PLP lender, it's different from standard eligible and certified. This is a personal agreement we have in place, known as the credit management system, and you will tell us how you're going to manage your portfolio based on your own underwriting standards and your servicing policies. With the PLP status, again, this offers a faster turnaround time, for example, 14 days. And not only that, but now that you have extensive FSA experience working with us, you turn in 2 documents. 1, the application, and 2, the loan narrative. Let's briefly go over some of the guaranteed farm loan purposes. Farm ownership. You may hear us refer to that as the FO. The farm ownership uses to purchase farmland, any type of construction or repair on the buildings on the farm, also for conservation practices and to refinance debt. The operating loan you refer to as the term operating loan. You can use that to purchase livestock, including poultry, purchase machinery, purchase cattle, fixtures, refinance debts under specific conditions. And then the last category, the operating line of credit. You can use this for farm operating expenses to put your crops in, for example, purchasing feed, seed, pay taxes. Also, purchase feeder livestock. Schedule principal and interest payments on term debt, and livestock replacements. Let's discuss a little bit about the interest rates and the repayment terms. Guaranteed lenders, if you're going to do a loan with rates variable or fixed for less than 5 years, the maximum rate is based on the prior business days SOFR plus 6.75%. If you're looking to do loans fixed for 5 years or more, the maximum rate is based on the prior business days 5-year Treasury note rate plus 5.5%. The repayment terms. For the term operating loans used to purchase machinery, cattle, and fixtures, for example, they are typically repaid in years.
Now patch mo on conference. Now patch. Sorry. Now patch. Conference.
For farm ownership loans, example, real estate loans or for construction, they cannot exceed 40 years. And for operating loans of credit, can be advanced for up to 5 years with repayment due 7 years from the loan guaranteed date. Lenders will basically reschedule repayment over the minimum period necessary after considering the customer's ability to repay and the useful life of the security. Let's get into some more key points about a guaranteed loan program. The maximum loan guarantee amount can go up to $2,236,000 per applicant. The typical guarantee, we normally would guarantee it at 90%, but it's based on credit risk to both you and FSA. Now, there are some examples that will even allow FSA to go up to 95%. And I'll mention a few. If the application will be used to refinance a direct FSA loan, we can go up to 95%. Again, if you are working with a customer and they were asking to refinance a loan that they currently have directly with FSA, we can look at a 95% guarantee. Another example, If the customer you're working with would like to have a farm ownership guarantee to participate in a down payment loan program, we can look at a 95% guarantee. And the last example, if the customer you are working with will be requesting an operating loan to make to a farmer who is participating in the FSA down payment loan program, we can look at 95% guarantee. The security. You as a lender will bear the responsibility of ensuring that appropriate and sufficient collateral is obtained and maintained to fully secure the loan. The security taken serves to protect both you as the lender and your interests and FSA, while also guaranteeing repayment of the line of credit or the loan. The security is accessed based on the overall security available, the existing liens, and the lender's standard practices. Importantly, I want to mention all security provided must cover the entire loan or line of credit. Separate security cannot be taken solely for the portion of the loan that is not guaranteed. Processing times. You heard me mention earlier, there is an advantage to being a CLP certified lender, also a PLP preferred lender. With the PLP and the certified, we process your loans within 14 days. And with the standard eligible lender, we have 30 calendar days to process. However, it's worth noting, FSA will often approve loans more quickly than this. The Guaranteed Loan Program is all about working with you as lenders and our community. Thank you. Do you have any questions? I'll turn it back over to you, Harley.
Harley, you're on mute.
Yeah, I noticed. I'd like to thank everyone for joining us today, and I think Ridge is going to wrap it up for us on our end.
Yes, thank you, Kimberly and Nicole. I want to give one more opportunity for any questions. It looks like we have one right here. Cindy Logston has asked, what is the cost?
The cost, the lender's fee is always what we say 1.5% times, if you want to do the loan for 90%, it'll be for the guarantee percentage times the loan amount. So 1.5% times the guarantee percentage times the loan amount.
Thank you. Cindy, did you have any other questions?
No, none here. Thanks.
Of course. Do we have anybody else who would like to ask one or write a question down in the comment box before we wrap up today's Zoom?
I will just add to Cindy's question there and let you know there are a handful of ways that that fee can actually be waived as well. So I would encourage you, if you're getting started, there are 3 to 4 different ways that that fee can actually be waived. For example, if they're participating in any of our direct programs at the same time, the Beginning Farmer Down Payment Program, that is a example of a way that that fee is waived. So you would inquire about that. They'll help you figure it. It's not something that you have to figure on your own, but generally we say it's 1.5%, but there are a handful of ways that could actually be 0.
Thank you, Kim. Any other questions? If not, we will be posting this recorded Zoom link after we sign out, and we'll also send out more information as the date approaches for our next webinar, which I believe is going to be with rural development. But if you have any questions related to that or other webinars that we're planning on doing, please feel free to shoot me an email. I will put my email address in the chat box right now. And I'll be happy to get back with you and provide whatever information I can. Okay.
I would just offer, if anybody has any questions for us or you think of after maybe you're going back and through or watching this recording later, feel free to submit those to Ridge and then he can forward that on to us. We'll be sure to get you some answers that way as well. But I would just take a second to thank Nicole for putting on the presentation for us today. And thank you all for taking the time to be here with us. We're looking forward to the next one. So thanks, Ridge.
Awesome. Thank you, Kim and Nicole and FSA for doing this. We really, really appreciate it.
Thank you.
Have a good day.
Everyone have a great day. Bye-bye.
Bye-bye.